Hello and welcome to another podcast on derivatives here at the Johannesburg Stock Exchange. My name is Anthony Leibrandt, Manager in the Equity Derivatives Division of the JSE. And today I'll be talking you through on how and where to get started if you want to start trading in derivatives here on the JSE. And we're going to keep it fairly simple today. And I'm assuming that for many novice retail investors, the first question that comes to mind is, who or what is the Johannesburg Stock Exchange? So let's just go through that and let's see if we can get that question answered for you very quickly. The Johannesburg Stock Exchange is licensed as an exchange under the Securities Services Act of 2004, and it is Africa's premier exchange, based here in Johannesburg, South Africa. And you might wonder, well, why is that so important? It is important because you, the novice retail investor, you are welcome at any point to walk into the JSE to speak to just about anyone here at the exchange, including our surveillance department. And you now know exactly where we are based. We are regulated by the Registrar of Security Services and the Financial Services Board. The JSE has operated as a marketplace for trading of financial products for over 123 years. And these products are wide and varying, and we will touch on a few of them shortly. It is a modern securities exchange, and for many years we have traded via an open outcry system on an open trading floor. That has changed now, and we are a fully electronic trading exchange where all trading, clearing and settlement takes place all electronically. And we have extensive surveillance capabilities. We can look at each and every trade down to time, trade price and value, as well as the counterparty, and we will act if we find that there's anything untoward with regard to any single trade that happens on a day-to-day basis. We provide financial information, and many people subscribe and buy this information. For example, the Bloombergs, Reuters and iNets of the day. And many novice retail investors and members also get access to our information. And why would you need information? Well, many people make use of this information for charting purposes. They look at various statistics. And for you to make an informed investment decision, you most probably would need some past historical data. And we as a Johannesburg Stock Exchange strive to be a responsible corporate citizen in everything that we do. Putting it very plainly, we have your best interest at heart. So let's take a look at the JSE and break it down further. As I said previously, it has been the marketplace for trading on financial products. And the Johannesburg Stock Exchange has got the equity market under its umbrella, where you would trade the generic shares, preference shares, debentures and the like. But more recently, we have extended our products offering, and we now also have equity derivatives on the JSE. And you can trade futures and options on products under the equity derivatives banner, like futures and options on indices, futures and options on single stock futures, futures and options on dividend futures, as well as futures and options on can-dos. These products are typically either cash settled or physically settled products. More recently, we've introduced the currency derivatives market on the Johannesburg Stock Exchange, where you can trade dollar, pound, euro, all settled against the South African rand. And these products are all cash settled in nature. We've also got the commodity derivatives exchange on the JSE, where you can trade the likes of wheat, maize, sunflower seed, and soybeans, as well as oil, gold, platinum, and these are typically mostly physically settled products, but you can also trade many of them on a cash settled basis. So why would you want to trade on the Johannesburg Stock Exchange? Many people ask the question, well, these products can be traded as OTC products as well. Off exchange, over the counter. Well, let me tell you why I would implore you to please consider trading on the JSE for various reasons. And the first one is transparency. There are no guessing games when you trade on the JSE. You can see exactly the time, the price, the volume. We know exactly who the counterparties are. And all pre- and post-trade activity are published to the entire market to see. There is genuine price discovery when you trade on exchange. The best price you see is on the central order book, and that is the best price in the market. Trade that price. All derivatives products, futures and options are risk managed and margined. And we would like to protect both buyer and seller from the retail client, all the way through to asset managers and large banks, and we treat all counterparties equally with regard to risk management and margin requirements. All products are independently valued on the JSE. We do not make use of any third-party suppliers to determine our end-of-day closing prices. All information is gleaned and determined here at the exchange, and we go as far as publishing our methodology on this very same website for you to look up. If you've got any questions with regard to pricing and issues around pricing, please contact us and we'll explain it to you down to the last cent. And since all trades are guaranteed by the exchange, by way of novation, there is no counterparty risk when you trade on the JSE. Although we as exchange cannot guarantee that you will make profits on the exchange, what we can guarantee you though is if you have made a profit, you will receive it the very next day, irrespective of the counterparty that you've traded against. And all trades are guaranteed by the exchange, and that simply means that the exchange becomes the buyer to every sale and the seller to every buy, and this is known as novation. The exchange, once again, will act in the best interest of you and of the entire market. So you'll say now, well, okay, I understand exactly what derivatives are. I now know what the JSE is. Where do I start? I would like to start trading derivatives in various markets. It's important for you to do your homework. Do you fully understand why you want to trade certain products on the JSE? Do you fully understand why you've taken the certain investment route? Do you fully understand the costs involved when you trade on the JSE? Have you done your homework? And it's important to note that rewards can be very high when you trade on the JSE, but so too are the risks and potential losses. Do you fully understand the product that you're going to be trading? Are they cash settled? Are they physically settled? Do you know what the initial margins are? Do you understand how profits and losses are calculated? Do you fully understand all cash flows from day to day? And do you understand how your brokerage will be calculated by your broker? Ask as many questions as possible. Phone the exchange and inquire. Phone the brokers and find out how it's traded. If you need be, phone the Financial Services Board if you need some more comfort with regard to trading. Once you understand all of these elements, choose your broker wisely. Ask questions of your broker. Are they financially secure? Are they registered with the exchange? If you've got any doubt, look up on this very same website. We've got a full list of all brokers registered with the exchange. We ensure that they have got the necessary qualifications before they are listed and registered on the exchange. Do you fully understand how you will be charged? Is your brokerage a percentage of trading, or will you be billed on a weekly or monthly basis? Fully explore all avenues. And ask your broker, will they look after your interest as they do with the larger hedge funds and larger banks that they trade for? And remember, the exchange can only offer you guarantees if you are registered on the exchange. Is the application that you have filled in sanctioned by the exchange and drawn up by the exchange? Make sure that all applications are received by us, that you receive a unique reference number that you will be traded through. And remember that once you fill in this application form, you have then got a legal responsibility with regard to all settlements and cash flows on a daily basis. We spoke earlier about risk management and initial margin. Just very quickly to touch on that, it's just basic terminology when trading derivatives. It's important to note that derivatives are not risk-free products. They do carry risks. We as the exchange, however, mitigate these risks by way of what we call initial margin. An initial margin is basically the worst possible loss that you can experience over one trading day. What we as the exchange do, we look at historical data for each and every contract and each and every expiry, and we will determine what is the most that you as an investor can lose, whether you are a novice retail client or the largest hedge fund in the country, what is the most that you can lose when trading that specific contract? That is what we will ask for as initial margin deposit. And it's basically a good faith deposit that you will lodge with the exchange, that we will invest on your behalf. It will earn interest, and when you exit your contract, you will receive that back with interest. It is held in deposit by the exchange and returned with interest when you exit your position. And please bear in mind that we will only call for initial margin or this good faith deposit if you've got an open position at the end of the day. So let's look at what initial margin currently is roughly on the exchange. It's approximately 10 to 35% of the futures value that you have traded. So let's assume you have traded a share and the underlying spot value is 225 Rand and 40 cents. One future is equal to 100 shares if you're going to be trading a single stock future. The trading value, therefore, is 22,540 Rand because we will multiply the 225.40 by 100 shares. And the initial margin that we will calculate, roughly, for that specific contract will be 3,300 Rand. And since we have then got the initial margin of both buyer and seller, there's no counterparty risk. All trades are therefore guaranteed by the clearinghouse, which is SAFCOM, the South African clearinghouse, and SAFCOM therefore becomes the only counterparty to all buys and sells. This is known as novation. We've now spoken about initial margin. Let's quickly touch on what variation margin is. And put very plainly, variation margin is profits or losses as calculated at end of day. And like all things in life, a profitable trade or something that will make you profit is if you buy it at a low price and sell it at a higher price. That will be regarded as a profitable trade. Also, since you can go short on the derivatives exchange, if you sell something at a high price and you buy it back at a low price, that will also be deemed as a profitable trade. A loss trade, in contrary to that, would be if you buy something at a high price and the market goes down and you sell it back at a low price, you have made a loss. Also, if you sell something or sell a product at a low price and buy it back at a high price, you also deem to have made a loss. And profit and loss is calculated at the end of the day of the fair value calculated price as determined by the exchange, and this is known as the fair value price. Position holders of profitable trades will receive variation margin. You've made a profit, you will receive variation margin. You will receive that profit. Position holders, however, of loss trades needs to pay in variation margin. And please take specific note that profit and losses are calculated every single day. And if the price changes from one day to the next, there will be variation margin movement. So when you speak to your broker, make sure he explains to you exactly that you could be responsible for paying in variation margin on a daily basis if you continue to incur losses on your trade. You will also receive variation margin every single day if your positions are profitable on an ongoing basis. And just very quickly, let's assume you've got a long position. In other words, you've bought a future. You want the price to go up. If the price does go up, variation margin is received by you. Let's assume the price goes down. You will have to pay in variation margin via your broker to the exchange. If you are a short position holder, you've sold a derivative. You want the price to go down. Let's assume it does go down. Variation margin is received by you because you have now got a profitable trade. If the price, however, goes up, variation margin will be payable by you. And in closing, let's put this all together now in a nutshell. Let's look at the derivative risk structure management, the management structure of the exchange. We're right at the top of the stack and top of the tier, you will get the Johannesburg Stock Exchange. SAFCOM falls directly below that. And SAFCOM is a clearinghouse for all derivatives transactions that takes place on exchange, on the Johannesburg Stock Exchange. Below that tier, we have got 8 clearing members. And these will typically be your A1 banks and international banks. And you cannot trade as a member unless you trade through a clearing member on the exchange. Below this tier of clearing members, you then got the ordinary members. And these would be your typical independent broker, your JSE brokers. They are also merchant banks, they are commercial banks, and they are institutions. We have to date got approximately 120 registered members on the exchange. You will find the details of each one of these here on this website, so you can look them up in your own time. You then get the final tier of a client, which is the novice retail investor, your doctors, your lawyers. They could also be retail banks and institutions that have not registered as members on the exchange. So that is the tier. And very basically, a client that makes a loss will pay the loss over to his member. The member will then pay it over to the clearing member, and the clearing member will lodge it with the exchange. The exchange will make sure that the person on the other side of the trade that's made the profit will receive it via the same structures. You as a client trade today and you open up an account and you've got an open position. Your initial margin will flow up to your member, it'll flow up to your clearing member, and it will be sitting with the exchange where it will then be invested, and you will earn interest on that. And in closing, all I've got to say from my side is happy investing. And if you've got any questions, please look up on our website. We would like to hear from you. Forward all your queries and suggestions through to these email addresses, and that is the JSE website, www.jsc.co.za. Thank you.